Well, let's take a closer look now at how consumption is being shaped out in India and whether or not the rush in terms of consumer sentiment and the uptick in consumer sentiment will be fueling earnings effectively. George Heber Joseph is the CEO and CIO of Ask Investment Managers. He joins us now today to talk about that very thing. We're coming to the tail end of the festive season, actually, sir, and we've seen on the ground, I just want to know what you've seen on the ground with regards to how robust demand and consumption has actually picked up due to some of the GST reforms and some of the efforts to try and at least unleash more of the animal spirits among the Indian consumers.
Thank you. Yes, there is a strong sense of optimism this year. The festive season in India generally is a time of celebrations, sentiment booster, and also a growth catalyst. So when I look at from that perspective, the confluence of strong consumer confidence, easing inflation, and also the rising disposable income is clearly visible in this festive season. When we talk into the details, there is good amount of jewelry purchase, housing, as well as white goods and cars and two-wheelers significantly on stock out situation at this point in time. So a very, very strong start we could see after a long lull period.
George, I wonder if there is a difference, though, if you could help us understand if there's a difference between consumption trends in the urban and rural sectors of India, because some are actually pointing out that you have to be clear as to which part of India you're looking at. Is there any clear divergence or perhaps a difference in how Indian consumers in the urban metropolises are approaching this confidence versus, say, some of the rural counterparts?
So when you look into the details, what is clearly coming out is the two-wheeler purchases also, specifically driven by rural and urban, but more to do with the rural. And, that is picking up very fast. And, that is a good sign. The tractor purchases is increasing, which is again a rural folks driven, consumption. And also we are seeing the consumption across board in consumer durables and electronics. Not only from the urban folks as well as from the rural as well. So FMCG, auto, consumer durables and electronics, and there are talks about real estate and home improvement also picking up very fast. All put together, it is a broad-based, consumption story, driven by rural as well as, urban.
All right, George. The big question, though, here, I believe, is will all this demand result in a significant earnings boost? And some argue as to how quickly the earnings transmission is actually for Indian markets and some of the corporates listed out there. Can you give us an idea of which sectors might see a stronger and more immediate impact from this consumption boost that you're documenting when earnings season, both now and in the future, actually rolls around?
If you look at in the recent past, a lot of actions from the government as well as the central bank, the rate cuts, 100 basis points, interest rate cuts over a period of last 1 year, and also the cash reserve ratio also has been brought down, which actually flows into the system in terms of the growth opportunity. And also if you look at from the perspective of GST cut, which has been recently announced by Mr. Modi, and that also is increasingly benefiting a lot of consumption patterns. So it is a host of activities, and also again, 8th Pay Commission is coming on board, and that also will have a booster effect on the consumption story, especially in the two-wheelers and four-wheelers. So we are seeing that all the actions which we have seen in the last few quarters, it is going to benefit, and the results are there. The festive season is started very strong, and we are seeing the sentiment all across in the urban as well as rural. Now, when you look at some of the reasons why we were waiting for this entire fillip of growth, the GDP was always going strong, but at the same time, the earnings growth was slowing, as you were rightly mentioning. But what we strongly believe is that the sectors which are more of GST beneficiaries will be the first one to react, and that will be autos, and also to a certain extent FMCG sector, and also you will see a good amount of improvement, home improvement, which will also kick in during this festive season, which will benefit cement consumption and so on and so forth. So all these put together, we believe that it will flow into the banking system, and the banking credit growth also will start inching up. The user industry is getting more orders, which means that the capex in some shape or form will kick in the private capex space, which already been started, but you will see stronger growth coming in. So it is a wholesome recovery phase in H2, what we are expecting. And, banking sector, which is especially the private banking space, which is deeply, in a consolidation phase, we think that there is a good amount of growth possibility. So autos, banking, cement, and some sort of consumables and engineering and capital goods and real estate will be the ones which will be on the focus, according to me.
And what about financial services? I'm thinking about, say, those who provide insurance, brokerages, or even wealth managers like yourselves. I mean, some say that because of the higher disposable income, it might actually give more people room for savings and investment. Have you seen an uptick actually in your day-to-day operations? Are people asking, pun intended, for more of the services provided by groups like Ask Investment, for instance?
Absolutely right. The last 1.5 years, market has not gone anywhere. And if you see, there is a significant amount of consolidation which has happened. And because of which, people who have been waiting on the sidelines started asking that, where should we invest, and, what should be the modus operandi of investing into equities. And what we have been saying is that there is a good amount of attractive valuation visible in the large cap space, and also the capital market theme, as you rightly pointed out, is in a massive tailwind is visible for the next 10 years or so. And there is a huge amount of money going to flow in the capital market, focused businesses, especially the wealth management and asset management businesses, will do significantly well. And the beneficiaries of that are exchanges and, depository participants, which we think, is going to be a long-term structural themes to play. And alongside, you're seeing on the capex revival stories, specifically with regard to the defense-led capex, which also attracting a lot of attention from the government, and the orders are flowing through. So there is a good amount of capex cycle recovery on side is happening. At the same time, the consumption boost will add to the private capex story as well, because last 5 years is more of a public capex, which will change to the public plus private capex. So we are estimating that there is a full blown recovery phase coming through, and most of the sectors, the cyclical sectors, domestic oriented cyclical sectors, going to benefit materially. Consumer discretionary over staples, and and we believe that it will flow into the banking system, so which will be big beneficiary, and financial services obviously it will be under the radar.
So autos, FMCG, and in some ways banking and financial services, those are some of the sectors to watch out for. George, I'm curious because we actually had a guest just the other day from Eastspring, and portfolio manager looks at India, and she did stress that while there is upside for the Indian markets, you have to look beyond the themes and you have to look beyond the headlines, actually. Basically stressing that identifying sectors is not enough, because you'll have to be also a bit more meticulous when you're trying to identify certain stocks if you want to dig deeper. For investors who might want to dig a little deeper and actually identify winners within these sectors, how would you advise them to approach that and make sure that they're identifying companies that can benefit from these long-term trends that we've actually identified?
Absolutely right. So India is in a growing market, and is one of the fastest growing market in the world, and which has a potential of the strong demographics. The fiscal is very strong. Government actions are very strong. So there is a huge amount of optimism automatically kicking in. And when you look at various sectors which are the beneficiaries from the structural demographic themes, auto, FMCG, pharmaceuticals, and banking sector becomes extremely important because these are all B2C plays and which has a good amount of very strong companies, proven track records visible in these sectors. When you and when you wind back and see that some of these government actions which are also adding to the tax collections, and this GST rollback, and some of the actions also, which means that the volumes will kick in and the GST collections can actually inch up and probably hit all-time highs. So, and alongside, it will drive employment and informal incomes. So, to my mind, there are many sectors to be looked at, especially the banking sector banking and financial services sector looks the most attractive bet. I cannot take stock names per se, but at the same time, cement sector looks very interesting because it is connected to the real estate, the home improvement, the luxury real estate is affordable, also is improving. And also you are seeing that, specifically the domestic oriented cyclical sectors like auto and other
Right.
discretionary spending and aspirational spending is increasing substantially. So many pockets to play, hospitals, hotels. There is a
Okay.
bunch of ideas in different sectors which is linked to the domestic economy to play.
Okay, George, George, now let's shift from domestic to something more global now, because as we head out of the festive season in India, we're now focusing on the U.S. holiday season. Of course, that puts a lot of Indian exporters that might be facing higher U.S. tariffs under the spotlight. Is there a risk, actually, that they might see their earnings impacted significantly in this U.S. holiday season because of the higher tariffs? What are your thoughts with regards to what you might be tracking with regards to these exporters that might be vulnerable?
That's right. If you look at this is a shift in in a decade, what I would call it. From 2020 when the inflation and interest rates bottomed out in U.S. and when it started inching up. Inflation protection sectors like real estate, commodities, in engineering, capital goods, and also the utility sector did the best. If you come look at from the Indian context, and these are the sectors which will do well in the future as well, and especially the financials also the some sort of beneficiaries in that regard. So it was a marked shift from the previous decade where the consumption was 2010 to 20 was the consumption story, and first decade if you see 1990 to 2000 was
Right.
the TMT, technology, media, telecom story. So I believe it's a
Okay.
decadal shift which has happened in 2020, and we are going to see significant amount of growth in these sectors. And the exporters, as you rightly mentioned, will struggle, and also many of these export oriented businesses which are facing the challenges of tariff
Right.
as well as challenges on on the pricing will be on less of reckoning at
Okay.
this point in time.
All right, fascinating insights. George Hebert-Joseph, CEO and CIO at Ask Investment Managers. Thanks for letting us ask you the questions that are pertinent with regards to India's festive season and some of the tariff risks facing some of their exporters. Well, coming up, India is still in the line of fire when it comes to Russian oil. We'll talk